Good morning, everyone. Paul Duncan here with GammaEdge. It is Monday morning, the March 14th at about 6:30 in the morning. Last night's open mic session was really fun. I appreciate all of those who joined that. This morning I wanted to highlight some of the things that we talked about last night, just specifically in terms of setups. So I wanted to cover a little bit about how we looked at those setups for today, being a 0 DTE, and where we think things could potentially go. Within the GammaEdge Discord, we have two membership levels right now. We have the gold level and we have the bronze level. I'm in the gold section right now. Everything that I say here can be accessed if you are a bronze member, so don't fret. You can just run the channels manually, of course, up here, or run the charts manually up here in the charting channel. But for the gold members, we make it just a little bit easier for you. We populate these charts overnight so that when you start your process in the morning, they're all available to you. Let's start with the SPX. It's a standard output. We are where we run the current expiration, and then we run after with today, in this particular case, since it's 0 DTE, with it removed. And without even looking at the levels or anything related to that, you can see that we're in a gamma negative condition. The red wing, which is the cumulative negative gamma, is much larger than the positive wing, the green wing here. And this is telling us that just in general there are far more puts that are shorter term dated in the complex as compared to the calls that are in the complex. So one of the first things that we look at when I click on this chart is I'm looking to see where are the dominant levels. And in this particular case, the spot price is indicated down here, and 4203.49 is where we ended on Friday. You can see that we're below the zero, but we're above what is called the put gamma, or put gamma exposure level, which is the dotted lines here. And you can see that since we're above that and where the other gamma levels are, that the folks to the left of this area are considered out of the money, and the folks to the right of this area are considered in the money. This may play a pretty significant role today, because this level that you see here, this 4100 level, is a dominant level within the overall structure. So that is something to pay attention to. And you can also see that overall in the SPX complex, 4600, which is this level here, certainly could also play an upside boundary, although I don't have any expectation that we're going to move that aggressively today. When we run these charts overnight, we also post the equivalent of the double S command, so $SS, and that gives us just the summary for the current expiry as well as the future expiry. And that's useful so you can just compare the different levels and just see, do we have a state change from one expiry to the other expiry. Finally, one of the charts that we display is effectively, because it's in the SPX and the SPX has a Monday, Wednesday, Friday expiry, is the next expiry, or 0 DTE chart. And the 0 DTE chart zooms in a little bit, and it also gives us a view of what is expiring today. And we feel this is fairly important to understand. Again, looking at the levels here, you can see things have changed a little because it's today's expiry. The highest call GEX here, we see right here at this level at 4300, and the highest put GEX is at 4100. You can see the current spot price as where we closed on Friday, and you can also tell that all the puts that would be to the right of the current price would be in the money, and you can see there are some fairly significant gamma levels here. So those puts are in the money, and then you can see to the left here, all of these puts would be out of the money. Now this could have a fairly significant impact on the 0 DTE for today, because as we move on down closer, more and more puts become in the money. And we think this is a fairly strong indicator that if folks decide to monetize, if they get any sense that we're going to get a reversal within the day, they may monetize, and the response, dealer response in that case, when we are closing our puts, is that the dealer will end up buying futures or the underlying, and that can have, as we've talked about last night, that can have a face-ripping reversal rally within the overall gamma state. So we want to watch for that, and we go into today knowing, of course, that 4100 becomes a downside line in the sand, and that on the upside, the 4300 level will become an important level. Also note the zero here, the nearest strike is 4285, and so below that level you can see there's a lot of transition that goes on, and it's worth paying attention to that. So from the SPX perspective, as we move down, a lot of puts are converting from out of the money to in the money, and if we continue down towards the 4100 level, one of the trajectories we could see for today is that we could get a reversal if folks decide to monetize these. Now, as a cash settled index, they're under no obligation, of course, but you can imagine that a little bit of wiggle room into the close. There are going to be some folks who are in the money and out of the money, and so they may want to monetize, and that monetization of those puts could actually force us to come north very quickly. So that's the SPX. It's good to also take a look at a few of the other charts. The SPY shows much the same condition. We've got a very dominant negative gamma cumulative GEX here, and the positive cumulative GEX, as you can see, is much smaller. You can see a lot of negative gamma overall within the SPY structure compared to the amount of positive gamma that's shown here. As you scroll on down through, again, the same levels that we talked about, again, auto-populated overnight. And then when we take a look here at the expiry chart, again, this is the SPY, not the SPX. It also is a 0 DTE. It expires today. And you can see a little different situation as compared to the SPX. We're right up against a primary level here at 420. That 420 level is the highest put gamma exposure for the complex, and you can see up here at 430 we have a fairly dominant level 2, but not nearly as much in magnitude compared to the negative gamma exposure. This too could play a very key role. What will happen here today is that you can see there's not a lot of options that are expiring in this area today, giving us the gamma exposure. And I would say we call this the doldrums area between the two goalposts, where we may have some monetization, we may not. The moneyness of these to the right here, since you have a predominant red here, this is net negative gamma exposure. We may see puts monetized as the price moves up. We may not see it. There's not a lot of pressure here. To the left, we have a lot of out of the money type of structures here, strikes here, and what will happen is that they may try to monetize their extrinsic value that they have remaining for today throughout the day, and so the immediacy of a dealer hedge could be minimized. It doesn't really exist. Things could change though if we open up and start heading to the left here. You can see this large gamut level at 420 as I just mentioned, and once we move to the left here, this level here goes from in the or out of the money to now in the money, and that has a huge impact on the overall expiry structure. It's important to understand what that potentially could mean. So let's dive into that just a little bit. When we are moving to the left here, all of the folks who are at 420 and holding there now go from what we effectively call a limit zero, meaning that their deltas, if the price did not move at all today, what would happen is that they would see decreasing deltas throughout the day, right? So it'll get smaller and smaller, and it limits towards zero because they're out of the money. So the people to the left of this, including the 420, if the price does not change, would be effectively watching the value of their puts get smaller and smaller. If the price moves to the left here, though, what happens is that this large open interest that exists at 420 goes from a limit 0 to a limit -1. And the reason that is they're now in the money. And so instead of decreasing value as we approach the end of the day, as time marches on, they're actually going to approach the -1 level. And this has, we think, a fairly significant impact on dealer hedging, because now the deltas associated with this 420 level are going to be really significant. And as we lose price to the left here, you can see more and more net negative gamma. So all the open interest that exists here on the put side will become more in the money. And as the price falls to the left here, more and more of these deltas that are up here at the 420 level are going to become closer, what we call limit -1 in the delta, as price falls here and as we approach the end of day expiry. We think this will be very significant, because as price falls, there will come a point where we don't have any more sellers, and we'll start having people wanting to monetize and take advantage of the fact that they're in the money. Now remember, this is the SPY, and so this is not a cash settled index. This is an ETF, and a lot of these folks will want to take those profits before the close, and in doing so, they're going to go from a limit -1 if they're in the money towards 0. They're getting longer. The reflexivity of the dealer response suggests that the dealers are going to be at a limit +1, and they're going to be getting shorter. And so the dealer response, as we close these puts, will be to actually buy the underlying, buy the SPY, buy the futures, buy the SPX. And what will end up happening is we could get a face-ripping reversal to the upside as these puts are monetized. So we want to be mindful of that. We want to be mindful of this 420 level. You can see 410 has got a level here, and this loosely corresponds to that 4100 that we just saw in the SPX. So keep an eye on this. I think this sets up one of the trajectories that we have for today, and we probably want to pay attention to that. When we look at the Qs, it's pretty much the same story in terms of the overall net gamma condition. Very, very large negative gamma here, very innocuous on the positive gamma. You can see from the Q's perspective, we're above a major level here. That level is 320. So I think that's an important level for us to be mindful of as we look here. The zero sitting up here at 355. You can see that up here. Again, we pick the closest strikes that are here. And as we look down at today's expiry for the Qs, we've got a little bit of a different scenario going on here than the previous two that we just talked about. So you can see where the zero is for today, right? 332. You can also see we've got a fairly significant amount of net negative gamma sitting right here at 330. Of mind here, though, is take a look here where the current price is. And the current price is below this 325. And you can see the highest put GEX is sitting right here where all this red dotted line is. And that's important because we're to the left of that line. So these people are already in the money. They ended Friday in the money. And any movement to the left here will add additional downside value. The ITM portion will be everybody to the upside will be ITM. And so what we would see is possibly some monetization. Now, we have to presume that going into the weekend that these folks were already hedged, meaning the dealers were already hedged. And so it'll be a differential that we'll be looking for. So if we continue to the left here and price falls today, you can see that there is the potential again to have much like what we just saw in the SPY where we could monetize and go upward. So I think that'll be very important. This 325 on the Qs will be an interesting number to watch for today and where things could potentially go. So that's really all I wanted to talk about today. I think the important things, like I said, on the SPX, we want to watch a move down. We think lower left here would be the 4100 range. The SPY, we want to watch that. We think the 420 range, possibly also corresponding to the 410 area, would be a downside move. And then, of course, on the Qs, as we just said, we're already below the 325 level, and watching it move down could potentially result in some monetization and where we could go north. So I hope that is useful for everyone. You can find us at www.GammaEdge.us. That'll take you to a Discord sign-up page where you can get a 14-day free trial. all the tools turned on. We've got a great group, good voice channel, a lot of capabilities to look at different symbols in real time. And of course, you can follow us, and I ask that you do follow us on GammaEdge with an S, GammaEdges, on Twitter. And of course, if you're watching this on YouTube right now, would like you to like it. And if you have any comments, please feel free to add those. Thanks, everyone. Make it a great day.